Welcome to Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the S&P 500. I'm going to cover the ASX 200 as well as copper, gold, oil and uranium in a separate video. I'll leave a link for that in the description section below. As always, everything today is general commentary only, doesn't take your personal situation into account. With all of that said, let's get into our first chart. So I've got the S&P 500 up here on the screen. And well, this has been really interesting over the last week. So the S&P 500, it has quickly swung from being in a to fear of another large sell-off last Friday to right where we are at the time of recording, with the market focusing on the potential for a new all-time high. And all this has happened in the space of 1 week. And what's been really interesting is how quickly fear came on during this this pullback from the recent high. I think this is a sign that there's plenty of disbelief in the ability of the market to rally. And that's because people are just so quick to worry when we get these down days. So last Friday is a good example. This is where we saw this sell-off about a week ago. And what I do at these strategy sessions, I record them on Friday afternoon in Sydney. So due to the time zone difference, I don't see the Friday session in the US. That's because the US market is closing at around 6 a.m. on my Saturday morning. But not seeing the Friday session, it rarely makes a difference to what I say. And if you've been watching these sessions over the last couple of weeks, you'll know that I've been discussing the potential or the possibility of some consolidation following this exceptionally strong rally we had off last month's panic low. And that consolidation, that's what's been playing out over the last couple of weeks. But because last week's video didn't include this sell-off last Friday, this 1.7% fall, I had people telling me that, look, the outlook's out of date, you didn't get Friday's action. And again, I think it's this tendency to quickly jump to fear on the down days. The fact is that a single day's price action, it rarely changes the overall chart structure. If you're looking at markets over a medium-term time frame, a single day rarely does much, unless, of course, it's breaking a particular level. And as it stands, we have a strong rebound. We have a strong rebound off the August low. That's been followed by a pullback to the region between the 50 and the 100-day moving averages. This is not bearish price action. In fact, the V-shaped recovery that we had off the August low, it's actually a sign of strong underlying buying interest. And the other thing to note is that we also have these rising moving averages, and price is currently above the moving averages. So this is the definition of a bullish market. Last Friday's price action didn't change that. Yeah, 1.7% down day, it's notable, but it doesn't change the overall structure, not in the slightest. And I think the big lesson here is not to get too focused on any single day. Step back and take in the broader picture of the market's overall structure. And often you'll find that a sizable down day is just noise within an ongoing upward trend. The question here for me is whether the market is ready to sustain new all-time highs. So just looking at the S&P 500, it's had a 2-month consolidation from the July high. And you just look at this period over the last couple of months, it's chopped back and forth. It's effectively gone sideways. My favored view has been for a longer consolidation, potentially through September, maybe into October. But the strength of this rebound that we saw during the week makes me think that maybe a rally could start sooner than I've been thinking. The same setup is present when you look at some of the other key indices. So just having a quick look at the Dow. When you look at the Dow, it's already hit a new all-time high, pull back to the 50-day moving average and starting to rally off the 50-day moving average. The same thing shows up when you look at the S&P 500 on an equal weighted basis. looks very similar to the Dow. And I think this is really important, what we're seeing in the S&P 500 on an equal weighted basis, as it indicates that the rally is broad-based and not just limited to a few big cap stocks. The question mark for me surrounds the NASDAQ. So clicking over, having a look at the NASDAQ, what's different here is that it's still well short of its previous high. So it's not giving us that confirmation that we're seeing in the Dow and the equal weight, where they're making new all-time highs. For me, it's all about the timing. I have a bias towards more consolidation in the coming back to the S&P. The bias is towards more consolidation below the all-time highs, but I could be easily wrong on this. The market could push to new highs in the next week. I'll tell you what I'm doing in a moment, but first of all, if you're getting some value from this, please hit that like button. Please leave us your comment. Just, hey, thanks for the video. Just shows YouTube you're watching. YouTube shows other people. Also, click that subscribe button if you haven't already done so. Now, what I'm doing, my approach here, it's quite simply staying long stocks. That's been the position for some time. If prices break out in the near term, well, I want to be on board. I don't want to be on the sidelines waiting for a consolidation. I want to be on board. So I think staying long stocks is key. I'm also looking to increase exposure when I see the right setups, and I'm using wide trailing stops. In the event that we do get more consolidation, which does remain a possibility, if we do get that consolidation, I've got those wide trailing stops to try and see that consolidation off. We could see a breakout, or we could see prices pull back towards the moving averages. I think it's a case of being ready for either scenario. So look, I think we will leave that there for this week. Hopefully that has been interesting. Thanks for joining me. Look forward to coming back. We'll talk again next week. Till then, bye for now.